as a trader, had a Diet Coke, sip of Diet Coke. You got to understand how to read the moves and understand what's going on in the market. Where the trap volume is, what the market maker is doing, how he's jamming up the traders. That is why it is not necessary to analyze your charts all the way back to Kingdom Come in February of 1907, that people that follow technicals do. Reading the market maker over the last 3 to 5 days at the course of a week will give you a directional bias, identify where the volumes are trapped and where the retail traders are stuck, and you will have your directional. Identify the midweek reversal. Tuesday, Wednesday, or Thursday, it's coming in. Midweek, Sunday, Monday, Tuesday reverse, Wednesday, Thursday drop. Rise Sunday, Monday, make a big fat M, drop Tuesday, Wednesday, Thursday, and Friday, and pull back. This is the cycles you have to be able to walk up to a chart and identify. Our group of traders that understands this saw the sell-off coming when they hit the high 3 times on Sunday night going into Monday. When market makers take the trouble to go back a 3rd time to a level and don't break it, the correction is imminent. When market makers go back a 3rd time, repeat the low of the day, the rise is imminent. They didn't go back to the level because they felt sorry for you and wanted to let you out of your trades. They went back there a 3rd time because there was so much freaking money down there they couldn't stand it. They had to come back and grab it. If you understand that and start understanding the other side of the chart, not the side that you see, the side that they are showing to you, and start to think like they think, you will start to have success in the business. And if you get it quickly, a light bulb will go off. It'll be almost immediate. You must anticipate when and how these moves will present themselves. The timings I'm going to talk about, the session starts, session ends, the Brinks trade. I will cover all of this for you. You can truly beat the market maker by simply trading in line with his behaviors. For you new guys, because in the session changeovers, we anticipate a reversal, New York reversal, part of the cycle. I want you to start to look to take your profit. If you're a London trader, you need to enter in the London Open and be out by the end of the session. If you're a New York trader, I want you to look to make your entry between 8 and 11. 9:30, we'll talk about that. Look to be out by 12, 1 o'clock in the afternoon. When your take profit is hit, or when the market comes to rest into consolidation to trap the traders for the next day, you take. If a trade does not see substantial profit in 2 hours, take your profit or a small loss. This is not negotiable. Why? If you see a perfect W formation or a setup, and it doesn't move into profit within 2 hours, upon further analysis by the market maker, the contracts were not straddled in the configuration that he had hoped for. This lack of configuration forces him to hold the level beyond the 2 hour mark to accumulate. The accumulation phase on an extended period of time could lead to another stop hunt against the original position you thought you had. Correct. Save yourself the pips. Take a -7, +5, +2, -3. Scratch yourself out and get on with your day. Example. Level 1 consolidation. Okay, we had a three hit to the high in the GBP crosses. They went high one more time at the London Open to validate the long holders, to make them feel good about themselves, warm and fuzzy. The bottom fell out. Today, they showed what appeared to be a W going into the red box. There's no chart up here. I'm talking. Take notes. Market makers extended the consolidation zone and did not rise much off of the low today. They then hit it again. Why? 3 levels wasn't seen. They needed one more hit to the low to hit their goals, to reach their targets. Sam, nice to see you in here, buddy. If the second leg presents, let's say you took a V bottom. Let's say you took stop hunt low, 3 candles to the low, and it pulled back, and you took that trade. If you're in that trade and you're counting 2 hours, and say an hour and 45 in, it paints a second leg, and it pulls back, restart the clock. The 2 hours is not negotiable. Don't come back and go, oh, I waited 5 more minutes, because I don't want to hear that shit. If they don't move in 2 hours, the criteria or setup for which you took the trade is broken down, they got something else going on. Their contracts aren't straddled right. They're going to make another stop hunt or a move. Sometimes you'll take it off and you go, damn, I had it right. Sometimes you'll take it off and go, oh, it's stop hunted again. The reason for our setup or the criteria which you took the trade on is now broken down. It becomes a 50-50 gamble. We are not in the 50-50 gamble business. Our job is to take high probability setups based on market maker behavior. He shows you an action, you react to it. He showed you stop hunt low, you buy against the retail trend, take it long. He comes back to the level but doesn't take out the low, the trade is still good long. Start the clock over. He holds the second leg at +5 and goes into consolidation for 2 hours. You scratch the trade and give yourself a break. Okay? That's the rules. They're not negotiable. Write them down. There are 3 market makers strategically positioned around the world. One for each time zone. Some have 5 desks. Some have 3 desks. But for the most part, they work about 6 to 8 hours a day. Here's the difference. You're one guy. You put your trade on, you lift your stop, you sit there like a moron and nurse it for 3, 4, 5 days. These guys go about their business. They're unaware of the suffering that you're putting yourself through. They're unaware of the fact that you've been drinking Red Bull, punching your wife every day because you're in the wrong trade and sitting there like an idiot waiting for it to come back. If you get jammed up at the midweek reversal, you can forget it for 3 to 5 days. If you get jammed up at the midweek beginning or at the false move week beginning on Sunday, Monday, you can forget it till Wednesday or Thursday. They don't come back to the levels to release the traders because that's how they make their money. So if you sell into the stop hunt down, you got 2 to 3 days of rise before you're going to even see a chance of getting out. If you buy at the high of the week, Wednesday, when they make the first leg of the M, and you buy long at the top at the worst possible place, which people do, by the way, there's a whole system based on that by a guy named, I don't need to say it. He takes the breaks of the highs and the lows. I promise you it's not a profitable system. You don't need to waste your time. If you buy at the worst possible point on the chart, unidirectional swing dragging you to Friday into the weekend, sorry about your luck. Buy some Red Bull because you ain't getting out. Our job in this group, in this room of traders, is to identify those extreme points on the chart, take them in the right direction against the herd, and convert